Give you one example of this. It used to be that when you were looking at the weather forecast, you opened up the newspaper and it said on Tuesday it's going to be partly cloudy, and that was all you knew. That was the only information that you had. And now on our Apple app, on the weather app, you can literally go minute by minute and be like, okay, at 9:52, there's an 82% chance that it's going to start raining, but then it's going to stop at 9:57, and then there's a 67%. You can get so detailed.
It's so true.
And it's important to ask, like, which were you better informed at? I think a lot of people were much calmer about the weather and probably had a better grasp on what they should wear that day. All they knew was it's partly cloudy and the high is going to be 52. Now, if that's all you knew, that was all the information that you needed, and all the information on top of that was just driving you crazy. But you weren't making better decisions. You weren't changing your wardrobe or bringing an extra umbrella because you had all of this extra granular information. It just drove you crazy. And I think that's true for finance as well. That, I don't pay attention to the vast majority of free financial information that is out there. You can get the most granular detail on every public company, their change in cash and what their margins have done in the last quarter for different product lines. None of that matters to me at all as an investor, and it would drive me crazy if I paid attention to it. All that I need to know as an investor is I own a very diversified portfolio. It's low cost, and I believe in capitalism. And so I believe that over the next 20 or 30 years, those companies are going to provide value, become more efficient, and all that value is going to accrue to me. That's the information that I have, and that's all the information that I know. And the more information that I have on top of that is going to drive me crazy.